What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our market open live stream. We've got CPI numbers, inflation numbers coming out later today, so hope you all are absolutely ready. It is very unusual to get them on a Friday because most of the times you get those CPI numbers come out on Wednesday or Thursday, but today is quite the exception because of the government shutdown, and of course we are getting a nice little delay in the CPI report as well. It was supposed to come out last week, but today is when we are going to get them in about 26 minutes here at 8:30 a.m. Eastern. So we'll take a look at the market's live reaction to the latest inflation report. QQQs are up over 0.5%. We've got SPY, so S&P 500 here, also pushing higher, up over 36 basis points. SoFi up over 1.4. Nvidia is also up over 0.5%. If you guys can see me and hear me, just give me a thumbs up. Just want to make sure the audio and the video is good. And here we go. We are ready for the inflation numbers. I'm going to go over the consensus. We'll talk a little bit about the monetary policy and, of course, what the Federal Reserve is penciling in for later this year as well as later this month. So October end, we've got another FOMC meeting where the rate cut probabilities are very, very high. We're talking about over 99% probability that the Federal Reserve is going to cut rates by 25 basis points. So, welcome. Good morning, everybody. So glad to have you here with us, and we'll take a look at the inflation numbers together. This website has not really updated since October 1st, since the U.S. government went into a shutdown. But CPI numbers, as you can read right here, BLS will publish the September Consumer Price Index on Friday, October 24th. So that's today, at 8:30 a.m. Eastern Time. So again, in about 20 minutes or so, we're going to get the CPI numbers. No other releases will be rescheduled or produced until the resumption of the regular government services. So this release, since it is an important one, we are going to get that on the CPI page, Consumer Price Index, and of course, that is where it is, October 24th at 8:30 a.m. Eastern. This is the delayed report for the previous month. Of course, inflation has been elevated. So if you come take a look at where we are sitting at 2.9 for headline year-over-year inflation. This number, of course, has been trending upwards from lows of 2.3. And if the consensus is correct, if 3.1% is indeed going to be that number today, we're going to be the highest level since May 2024. So since about 16 months or so, it's going to be at the highest level. And of course, almost a 1 percentage point higher since earlier this year, back in April. Same thing is true for all items as food and energy. 3.1% is the consensus, and that's going to be essentially flat to where we are right now on a year-over-year basis. Again, the highest level since February of 2025, so earlier this year as well. So coming over to some very important websites, the FedWatch tool, we got the next FOMC meeting in 5 days exactly. So right now the probabilities are very high for us to get a 25 basis point rate cut. So 3.75 and 4% is the range the market is expecting for rates to be at starting next month after the 25 basis point rate cut that comes in later this month here. And of course, if you take a look at the consensus for inflation, this is the delayed report. We also did get the jobless claims numbers, also delayed, but the consensus, of course, 232,000. We have no updates. We have no report for that either. So, but CPI numbers are going to be released. So 0.4% month over month, with year over year sitting at 3.1%. And of course, when you exclude for food and energy, we're looking at 0.3% month over month. For core CPI and year over year, we're sitting at 3.1% as well. So that's where we are for inflation. And November 13th is when the next CPI report is going to come out. And then, of course, December 10th is going to be the final CPI report for 2025. So hope you all are doing great. We've got a poll going on right now. Make sure that you participate and do me a favor, share this video and live stream with as many people as possible. So I'm going to paste the link right about here. And so do me a favor, share this with your other traders, investor friends, family, whoever wants to join. And of course, then we can take a look at the inflation numbers together. And I really want to see as many votes as possible, as a lot of participation here with regards to what you're expecting for CPI numbers to be at in about 20 minutes or so here. Are we going to get over 3.1, at 3.1, which is where the consensus is, or below 3.1? Of course, I don't have to say it, but if it's anything over 3.1, brace yourselves for a volatility spike and a little bit of a pullback in the markets. If it's at anything under 3.1, on an absolute basis, it might still signal some kind of acceleration on inflation, but the market's perception is always about what are the expectations and are we better or worse than what did we expect? And so anything under 3.1% could be seen as a bit of a neutral / bullish take, and anything at 3.1% could be somewhat neutral for the market. I would say it's a little bit more neutral / leaning more bearish because 3.1% is, once again, getting that 3 handle on the headline could potentially spook the market, right? So that is something to keep in mind. Even though core has been sitting at 3.1, headline's been sitting under 3% for quite some time, right? So all items, come take a look. We've been sitting at under 3% since January of 2025. So since earlier this year, we haven't really crossed the 3% threshold. So this would be the first time this year getting up to over 3.1%. So that would most certainly signal a lot of acceleration on inflation back to the upside. So once again, thank you so much for joining, everyone. Again, do you or anyone think we are all priced in for 25 basis points? I think we are. I think we are most certainly priced in for 25 basis points. Government spending is going to be down 99%, so that's good. Because of the shutdown, it's possible that we do see some of those effects also take place. But Trump tariffs have also resulted in a bit of a one-off offset on inflation, which is what Jerome Powell also mentioned, that if you were to adjust for the tariffs, it's a one-off event, and that's why inflation is a little bit more elevated. I hope that is the case, and I really do want inflation to be under control, because last time Jerome Powell made those assumptions that, this is just temporary, it's just one-off, or it's just a seasonal adjustments, we know what happened, right? Inflation eventually got out of control and got up to over 7, 8, 9% on a year-over-year basis. So the last thing we really want is for all the progress, all the hard work, all of the developments that we've made on inflation for it to come down over the last year and a half years, since basically 2 years since 2022, to unravel, right? And for us to unwind all of that trade progress and inflation to accelerate back higher, which would be a really, really bad situation, because if unemployment and inflation both go up at the same time, that is the worst case scenario. So if you've watched any of my previous videos, we've talked about, dual mandate for the Federal Reserve. So this right here is the chart that I've broken down in many of my videos, right? So if you come over here, I believe that was the Chicago Fed. Let me just come over here. There we go. So the bullseye chart. And, we've talked about this many times in our previous updates as part of the monetary policy dual mandate from the Federal Reserve. And so their goal, their target, the bullseye, as we like to call it, is 2% inflation and slightly over 4% unemployment, right? That's the goal. This is where they want to be. And that's kind of like optimal economy function, right? Very much good optimization here. But of course, what happens sometimes and almost all the times where, economy is a part of many factors, right? There's a lot more than just inflation and unemployment. What ends up happening, of course, is that we trade in one of these 4 quadrants, right? And right now, if you were to take a guess, we're at 3% inflation and we are 4.3% unemployment. So this is exactly where we currently are for this dual mandate bullseye. Of course, the Fed's target is to move it down, right, to 2% inflation and 4% unemployment. But right now we're here. At one point, we were at 9% inflation. So I don't even have enough room to go up there to show you how high on that y-axis we were for inflation. But unemployment remained under control. So, this right here is a quadrant, which is very, very good. This is probably even better than where the bullseye is, because you've got low inflation, low unemployment, extremely solid economy, where you've got prices stable, in fact, growing, but not by a crazy amount. And you've got people employed, paying their bills, happy. This also manageable. You've got low unemployment, slightly above average inflation. This is a little bit concerning because you do have low inflation but rising unemployment. This is where Federal Reserve really needs to consider to start cutting rates. And I strongly feel that this is where the Federal Reserve is thinking we are. They're making their decisions off of the fact that, okay, unemployment is accelerating. It's not there yet. We're still right over here, but they're thinking, okay, unemployment is getting weaker, right? We're seeing labor market report starting to show some signs of weakness. Let us go ahead and start cutting rates, but not realizing that inflation is still pretty elevated. So right now, the exact situation, the exact point in this chart is right there. This is where we are. And does that warrant rate cuts? I'll let you be the judge. But this gives us a little bit of an idea, okay, where we currently are, where do we need to go, and what is the right steps to take in order to get there. So yeah, that is the complete breakdown of the dual mandate. We got 200 votes. Definitely do participate in the poll that we have going on right now. And again, we've got inflation numbers, CPI numbers coming out in about 20 minutes or so. 15 minutes now. 15 minutes until the CPI numbers come out. Okay, let's take a look here. I'm either going to roll my covered calls on Bitcoin for a nice profit today, Joe says. Yeah, I mean, Bitcoin is right now pushing back up to 111,000. Ether is also almost back up to 4,000 here. We're seeing a little bit of that momentum come in, and we'll find out exactly what happens in 15 minutes. Hui says, my take since we are in a choppiness kangaroo market, we will drop today after a nice run from yesterday. A drop today means they will buy on big tech earnings next week, but who knows? Yeah, I mean, volume is a key indicator for me to also, better understand the health of this market. And volume has been somewhat back and forth. Yesterday was a pretty decent day for volume. We did see some nice inflows. And if we do get a pretty good print on inflation, there is a possibility that we do get a breakout above this all-time high because we're just less than 0.4% away from all-time highs here. So that is going to be that resistance to watch for S&P. And the NASDAQ also very close to its all-time high here, 23,084. We are essentially down a little bit over 70, 80 basis points. So less than 1% away from all-time highs here. And if you do get a solid print, there is a possibility for a nice little breakout on some heavy volume. Hello, everybody. Thank you so much for joining. Bull Trap today is what Star says. And let's take a look and some questions here. But in terms of the Fed's balance sheet, it's highly likely, don't you think? I mean, as a contributing factor, I know there's more variables. Yes, I mean, there's more variables. The Fed's balance sheet has been swelled up during times of distress because they've been a huge buyer of bonds. And what does buying bonds actually do to help the economy? It's a very simple question, and let's see who can answer first. Why does the Federal Reserve actually start buying bonds, treasury bonds, mortgage-backed securities during times of distress? They, of course, lower interest rates, the federal funds rate, but then why do they go in the open market and start buying treasuries and mortgage-backed securities? What does that actually do to the U.S. economy, right? So it's a very simple question. Let me know if you have the answer, and we'll discuss that. Tesla December $500 calls, feelings. Well, I do have Tesla $500 calls that I sold, and we'll find out very soon whether that gets in the money or out of the money. But if you're feeling bullish, if you're feeling optimistic, feel free. But I'm not much for buying options. I mostly start selling options when the opportunity presents itself. So that is exactly what I like to do. Okay, Tesla's a bubble, soon to be a pop here. Market seems to be shrugging off the Canada trade tweet. Yep, I read up on that as well. Tesla doesn't make any money, all hype. So why do people like Tesla so much? I mean, you could say Tesla's in a bubble, but it's one of the only companies that is focusing very much on physical AI. Got so much data, driving data to work with for autonomous vehicles, and a lot of the industries or the sectors and the themes that Tesla's working on are very, very big, large TAMs, right? That's the huge attractiveness towards Tesla is what they're working on, not what they're selling right now. Of course, a lot of people can sell electric vehicles. And in fact, Tesla might be the most efficient electric vehicle maker. Balance sheet strong, one of the strongest automakers, but it's really the future of autonomy. Robotics, energy is what Tesla's entire valuation and idea and thesis is kind of built on. We're getting there slowly and steadily, right? Okay, to tighten money supply, well, let's see, what other answers do we get? Cash starts growing on trees. To increase the money supply and lower interest rates, liquidity. Yes. So when they are actually buying bonds in the open market, they are one of the biggest entities of demand for treasuries, right? So when they start putting money in, prices start to go up and yields come down. Because prices and yields move inverse to each other, as prices go up, yields come down. That's their whole idea of buying bonds in the open market through treasuries and mortgage-backed securities, is to make sure that yields stay low and they continue to come down, because that is going to help with mortgage activity. That's going to help with financing, lending, spending, all the different variables that are important for a functioning economy, right? During times of distress, everything starts to come to a halt, right? And the Federal Reserve is trying to solve that by lowering interest rates in the open market through the Federal Reserve. That's the Federal Reserve's rate, intrabank lending rate, and then also in the open market through buying bonds and controlling interest rates to stay down by creating this artificial demand that they come in with. And that's how the balance sheet swells up. And now they're letting those treasuries and mortgage-backed securities kind of mature. They're collecting the principal and they're not redeploying that cash at the moment. They're just kind of having this balance sheet runoff where they're letting them mature and expire and collect the principals. So, all right, Khalid says, I doubt Tesla pops. It is priced. It has priced in people's dream of success in an embodiment of Elon Musk, and always traded high valuations. Of a bull market, it would drop a bit harder than others. Yeah, I mean, we've seen Tesla drop significantly, right? I mean, if you've been part of the Tesla story for a long time, I mean, this has not been a normal, this has not been out of the ordinary. It's not nothing crazy. I mean, we've seen 55, 60%, 70% drops in Tesla without even blinking an eye, right? I mean, this has happened before. We've been talking about Tesla for a long time. This right here, from its all-time highs, we saw a 76% drop, right? So Tesla's going to do Tesla things. In my opinion, still long-term, massive potential. It all comes down to execution and Elon Musk's focus on the vision of Tesla and what it could be long-term. Great marketing skills of management, master of overpromise and underdeliver, Vault says. Yeah, I mean, that's true, but eventually they will come through, right? Because full self-driving with the new versions that are being launched, it's a slow and steady process of getting it right, because safety is a huge thing. And so, yes, Elon Musk for sure gives us the grandest visions and overpromises on the timelines, and then underdelivers, but he does deliver. The core is that the delivery does come in eventually. No one has a vision close to what they have. I agree, TD. Okay, so inflation numbers. Back to focus here. Back to why we started this live stream early. Again, make sure that you drop a like, everybody. Subscribe to the channel. I would really appreciate that. And definitely share this live stream with as many people as you can, so we can take a look at these CPI numbers together. For everybody who's joining us right now, the consensus is very clear. 0.4% for month over month on a headline basis, and then core CPI month over month at 0.3%. And then year over year, the market's pricing in for 3.1% for both of them, for headline as well as core, 3.1%. That's exactly what we have the poll for. It's 326 votes. I want to get to at least over 500. So definitely participate, vote if you haven't already. And we've got a pretty even split right now, 28, 34, 37 in terms of where headline year-over-year inflation is going to be. So there's no clear majority in this market right now. 37%, it's going to be over 3.1. 35% is going to be at 3.1, and 28% it's going to be below 3.1%. Interesting. That's easier to fool someone than tell them they are being fooled. Fair enough. But yeah, Tesla's made a lot of money for a lot of investors, right, over the years. It's practically trading at a near all-time high. It's down just under 10% from all-time highs. So all in all, I think as an investor, I remain very happy. So, okay, this is a kangaroo poll. I know, right? This is exactly what the kangaroo poll is all about. It kind of gives you a lot of idea. That's why we like to do these real-time, real polls, because you'll be able to get real data on how investors are positioning themselves, how they're thinking about things. And if we do have an over majority on one thing, that gives you a lot of insight versus even right now when we've got a pretty even split. I mean, it's 28, 35, 36, right? Is about as split as it gets, maybe a little bit more, but yeah, that's the nature of the kangaroo market, right? Indecisiveness, lack of direction, chops, range bound, consolidation. Those are all variables of a kangaroo market. That's exactly what we're seeing. Investors can't make up their mind. Where's this market going? What's the direction? What we're trading in range. We're consolidating. One day we're up, one day we're down. If you take a look at the S&P 500, look at these chops, right? So, I mean, this week we started off green, then red. Green and then flat. Exactly flat on Tuesday. Then red on Wednesday. Green on Thursday. So it's like red, green, red, green, red, green. That's all that's happening here in this market. There's no consistency. The streaks are not building up in this market, and as a result, we're just trading sideways. Karthik, are you on the board with BMNR yet? I've been building a position, wondering if you and your audience are already in it. Oh, you mean on board with BMNR? I thought you meant, are you in the board like Tom Lee is, the chairman of the board with BMNR? Yeah, no, we're very much on board. We're not in the board of directors for BMNR, but yes, we're very much on board with that trade. Been accumulating a little bit. I did sell some $100 calls on BMNR, which are most likely going to expire out of the money. And so, yeah, the plan is to continue to build a position. Okay, guys, we have people here that wanted to buy the iPhone 17 Pro Max, but it's simply not available anywhere. I mean, I ordered online during pre-order, and I'm still waiting 1.5 months already. That's always a good sign. Of course, one of the reasons why Tesla has been, Apple's been rallying to new all-time highs here. Long time no see. Shaggy, back at your lives after 4 years or so. I wish I kept those Palantir stocks at $20 when you started the channel and we're talking about it. I had 20-something shares and sold it. That's unfortunate. No worries. There's always opportunities in the market, and we're always on the hunt for the next Palantir, next AMDs, next Teslas, next NVIDIAs. But yeah, we have to be more selective. Not every single one of them is going to turn out to be a 2,000, 3,000% gainer. But if you have something that is a winner, hold on to it. Hold on to it with dear life, right? So hodl through the volatility. Why? Because it's much easier to hold on to an existing winner than it is to find the next winner, you know? So if you already find something that's working, double, triple down. That could be the better trade than to finding something new, which can have its own risks. So, okay, everybody. Let's do this. Let's get ready. Inflation numbers. What we're going to do is you guys know the drill. We're going to come over to the BLS website. I'm going to open this up in incognito to not have any cache issues. 8:30 a.m. Eastern hits. I reload, open the PDF, take a look at the CPI numbers, and of course compare them with expectations here, and then take a look at the market's reaction. That's the entire drill. Should take us about 30 seconds, 40 seconds at max to quickly skim through the report and then come back to the market's reaction. We've got equities on the screen here. And then of course we'll take a look at crypto. Let me just go ahead and split this. Ooh, blue. I like it. So we're going to keep it at blue here. 5-minute chart for Bitcoin. We're going to keep 5-minute for Ether. And then we'll pull up some commodities, precious metals. We'll put up gold here. Gold is going to be very important. Down about 1.5%, trading back down to 4K. 4K, low 4K here for gold. Okay, who's ready? Who's ready for this? We're getting an economic report after such a long time. It's just felt like forever that we've got a CPI report or an unemployment report or jobless claims even. Even jobless claims is freaking delayed. So we have just not received anything. So the market's really hungry for some kind of data. So I'm going to end the poll in about a minute here as we approach 8:30 a.m. Eastern. 30 seconds and I close the poll. Get your votes in. Get your votes in. 480. Right now, the front runner is 40% probability that we're going to see inflation worse than whatever the consensus is, over 3.1%, which could not be taken well by the market if it's well over 3.1. If it gets to 3.2, I mean, are we really expecting a rate cut at 3.2% inflation? I don't know. So definitely get your poll in, votes in here. I'm going to end in 5, 4, 3, 2. Can we hit 515, 520, 55, 59? I'm going to end it now. Okay, perfect. 512 votes, 39% winner, over 3.1% is the consensus. And we are 30 seconds away from this report. I'll just put that there. Okay. 15 seconds. Let's take a look at the market's reaction. Very, very important. Are these gains going to hold? Are we going to be hitting a new all-time high today? Or are we back in the chop? Back in this kangaroo market? Okay. 8:30 a.m. is here. Let me just open this PDF. If we had the September numbers, please give us the September numbers. Please, finally. The market's been waiting long enough. Last time, this website even went down when the numbers came out. Okay, it's loading. It's loading. There we go. September numbers are out. 0.3% increase for month over month. And boom. All items sitting at 3%. Core is actually down to 3%. And we should be getting a pop in this market. So headline coming in at 3. Below expectations. Core also at 3. We are both right on point here for 3%. Both of them actually coming in below expectations. Month over month, we're looking at 0.3%, which was on par with expectations here. But core CPI was pushing higher by 0.2%, which was below expectations. All 4 accounts, guys, all 4 of them were better than expectations, okay? Better than expectations for all 4 things. Headline and core year over year sitting at 3%. Right on the dot, we're at 3%. And the market's absolutely rocketed higher. Volatility dropped 4.4%. Gold is also slightly getting bought up here, but look at the pop in crypto. Bitcoin 1.4% getting up to almost 112,000. And look at Ethereum, $4,000. We're back at 4K for Ether. So big pops. Green candles coming in for the markets as well. SoFi is up 2.6. Nvidia is up over 1%. Nasdaq, of course, up over 1%. S&P is up 72 basis points. And Tesla is almost back to break even on the day. So yeah, report is good. Very, very good. Better than expectations here. So we can pop open the champagne for some gains, and markets most likely going to be hitting an all-time high here. If these gains, of course, hold up, a 70 basis point gain is going to open us up right about here, 6,800. So 6,800 on the S&P, potentially at the open for the first time ever to have been hit. Congratulations. Congratulations, everybody. Huge congrats. So if you come back to the poll, the 28% people that were expecting below 3.1% were indeed correct. They were right. We got a significant reduction in inflation numbers. Well, core is down, which is a very, very good sign. Headline is up to 3%, so that's something to definitely consider. But let's take a look at some of these numbers here. So month over month, we're seeing energy prices continue to come down. Another big change was used cars and trucks. That continues to come down. 0.1% decline in medical care commodities. And then 1.2% in utility piped gas service. 0.7 and 0.5% for electricity and energy services as well. Gasoline was up 4.1%. month over month, and 1.5% increase for energy. And what else was up? Shelter was up 0.2% month over month. Year over year, it's up 3.6%. 11.7% for utility pipe gas here, and 4.1, 6.1, 5.1% up energy overall. And food at home is up like 2 to 3%. So very, very good numbers overall. Joe says, I just need to hold your breath and see if Trump starts complaining about China on Truth Social. Shaggy says, I did below, not surprised. It's a bit late and it should be down for October as well. So yeah, overall, very, very good numbers coming in for CPI. So as I said earlier, beat on all four accounts, month over month 0.3, year over year at 3%, core CPI 0.2%, and core CPI year over year sitting at 3%. So that's where we are. We can reload this page as well. Should have updated. And yes, so that's where we are. 3% on headline, and core is coming down at 3%. So yeah, very nice way to close this week, because we've just been fluctuating back and forth here. On the week, the markets are still up 1%, most likely going to be up 1.5%, closer to 2% this week, given the momentum we're seeing in pre-market. And then also, if you come over to the seasonality, markets are up over 75 basis points so far in October. After today's potential gain, we'd be most likely up 1% this month in October. So, and then we're kind of heading into the best month of the year. Wouldn't it be like absolutely comical if the worst month of the year, which is September, was really strong at 3.5%, and then the best month of the year, which is November, seasonality wise, 76% win rate. No other month hits even close to 76%, actually ends up being red. Wouldn't it be like just absolutely incredible and hilarious if the worst month seasonality wise ends up being a very good month this year, which it already has, and the best month, which is November, ends up being absolutely brutal. Like, we just like drop like insane correction, selling pressure, a completely different world. And that's what the markets can actually do sometimes. You can wake up to completely different worlds and sentiments in the market. We've experienced it ourselves. But so, all right, let's come back to some of the comments here. Pushing the buy button for my Lambo. The question really should be what color? That's it. That's the question, right? The question is not whether we're buying it or not. The question is what color are we buying, right? So MACD, my account has grown so much this year. That's incredible. Baby blue or yellow. Let's see, break up out of that wedge here. Kevin says, yeah, so we got a pretty big consolidation, of course, that wedge for a lot of stocks as well. So yeah, yes for rate cuts. Yeah, so probability is going to grow for rate cuts, and right now the January probability is 47.5%. We're expecting 2 rate cuts this year, and then 1, 2, and 3. 3 rate cuts, and then markets pricing in for a hike in 2027. But 2 rate cuts for next year is what the market is. Well, 3 rate cuts if you consider this December meeting, December 2026. So 3 rate cuts for next year is what the market pricing in right now. Green, of course. So SoFi's upcoming earnings. We were talking about this in our Discord, and be careful if you are going to be trading options on SoFi for next Friday. Just make sure that you wrap up the earnings around the expiration for that call. And so what we're witnessing right now is, of course, a lot of consolidation here for SoFi, and resistance is going to stay roughly here at $30. If the earnings are strong, if you continue to see some growth, strong beat and guidance, I could see SoFi break out over $30 and hit new all-time highs. That would be my expectation, and support level is going to stay put at 24, 25. Anything under $25, and I am dollar cost averaging a little bit into SoFi. Do you think it's a sign of the top as the market then looks to underlying market issues, Akash? I mean, I think inflation numbers today are better than expected, and core is coming down, which is a good sign. Unemployment's been pretty strong as well. So I'm not sure if there are any big underlying issues. Yes, valuations are a little bit more of a premium right now. Forward multiples are trading at 26. Volatility is back down. So to be very honest, this is not a complicated market to trade. It is very straightforward, very system driven. And if you have a very clear idea, even something following as simple as my 5 basic checks on markets, like if those 5 metrics get hit, I close my eyes, I put money to work, I deploy, I buy, and that's it. That's all we have to do. Like if you're somebody who wants a simple system on deploying capital, dollar cost averaging, and buying without any worry about what's going on in the world and geopolitics and earnings and all that, just those 5 things, that's all that matters, right? And if you have those, the win rate's going to be very, very good, very high. So Palantir could surprise people to the upside. Yeah, I mean, but the thing is, expectations are already high, right? I mean, how high can their earnings and revenue growth can really go? Because expectations so high, and if they even come in a little bit shy of expectations, that can be seen as a bit of a negative. Even though on an absolute basis, that would be insane growth. But that's what happens when expectations really go up. Share your thoughts on 3M and good entry points as well. Let's take a look at 3M here. By the way, everything is just ripping right now, folks. If you come over to the hot watch list, where come over to extended hours, look at that. We got Bitfarms up 12%, Iron's up 8% right now, Nebius up 6%, Alclo up 6%, APLD up 4.7%, Open Door, Rigetti Computing, BMNR, Nevitas, CoreVeeve, Planet Labs, MicroStrategy, Joby, Archer, Grab. It's greenery across the board for this market. So 3M has been ripping. If you come over to the weekly time frame, you'll notice that we just broke out on new all-time highs here. And I would say that this is a very strong higher high and higher low pattern, right? So that's a pretty good ascending support for 3M. And this would be a little bit of resistance with a support level that's staying very strong right here at 148, 149 for 3M. So bought TQQQ when the news broke out. That's great. Congrats on the quick profits here. That Hong, funny my subordinate bought TQQQ because her chief told her about it, and it has been printing money for her. Yeah, just with leveraged ETFs, be careful. Because always trade with a proper plan in place, with proper risk management, stop losses, because otherwise you could really get caught on the wrong side of the trade, and with leverage, it can be pretty disastrous. So always have proper risk management. All right. So any questions, any specific stocks you want me to go over? I'm more than happy to. Let me know. Any thoughts on ETHZ or ETHZ here, which is part of the hot watch list. And again, we've talked about this before. If you come over to the daily chart, that's why risk management is so important, because you can see a stock go up 2,000%, all the hype can draw people in, and then 92% sell off, right? So I would just kind of write this off as a hype/momentum stock here. They also did a split, and I guess support level now is going to be closer to 1420s, 1430s for this stock. Any oil stocks and like leveraged side options like SOXL? So yeah, I mean, there's a lot of them that are oil leveraged. So I forgot what the exact name was. But there we go. NRGU is an oil leveraged, 3 times leveraged ETF, but low volumes, right? So pretty low liquidity. And the assets under management are also pretty small, 26, 27 million. So with any kind of leverage ETF, be very, very, very careful. You got to consider all of those things. Curious if you're buying, trading INDA, the Indian ETF. I mean, that was one of the ETFs that I did talk about and recommend for Indian stocks. Anybody who is interested in that. So, but I'm personally not buying that one because I have direct access to shares in India, so I can buy the actual stock. But if you want access to the Indian market, yes, INDA is a pretty good ETF that I think I've also included in the ETF watch list as well. Nike, Costco. Let's take a look here for Nike. So getting a nice little drop, of course, down 18, 19, 20% here. Support level is going to stay put at 68 to as much as $67 with a resistance that's all the way up to as much as $80 for Nike. So that is going to be that level to watch for Nike. Nice little potential upside there, getting up to $76, $77. So Costco we cover in our market updates, but let me just go over that very quickly. Just lagging a little bit here. So Costco 942 is where we are. I think it's been in a lot of consolidation sideways. We've got a support level that's going to stay up roughly around $900. So, in the low 900s, and resistance is going to be all the way up to as much as around 997. So that is the level. But then also we're seeing a lot of lower highs for Costco as well. So gets rejected. 901, 902 is going to be that support. So trade desk, we covered yesterday, definitely talked about that. BMNR, Tony, we covered earlier. Kareen, again, we talked about that a little bit earlier. BMNR, I am accumulating more, and it's been pretty range bound for quite some time with a resistance closer to 57.64 and a support level at $47 for BMNR. So let's take a look at a few more. Seller positions at the open, MACD. I mean, depends what your objective is. If you're trading, if you're investing, a lot of factors at play, but momentum continues. Pre-market, Nvidia is rallying 1%. SoFi is up to $29. I can sense a $30 handle soon, whether it's today or next week after earnings. I can sense a $30 handle. I really want to get up to 30. Palantir is also pushing up 1.4% pre-market. So we're seeing a nice little recovery there. Iron is the one. I did sell the $65 calls on Iron after buying the shares yesterday. So did a little bit of a buy right, picked up 50 shares, already had the 50, and then sold a call at 65. So nice little profit on that trade as well. So Bitfarms, Frank, I don't have much information. I definitely have to do more research on that stock. But be careful with a lot of these hot momentum trades that we have on our watch list. Yeah, Costco PE is higher than Nvidia. I know. It's just trades at that premium, and it has been trading at that premium for such a long time. So it's absolutely crazy. NU Holdings, let's take a quick look. We've done some analysis on this in the past, and we've got a resistance all the way up to as much as this level right here, 1640s, and of course a very nice higher low, getting validated very nicely. So it's got a nice little higher high, higher low pattern, and also a support right around here at 1450s for NU Holdings here. DCA for BITX on the way down or stop losses since you are bullish. So I am going to keep dollar cost averaging. So I am accumulating more BITX. Anything under $50, 51, 52, I keep adding a little bit, 20, 25 shares to keep accumulating because it's really just a play on Bitcoin. That's what it is. Amy, should I sell Apple to buy Google? If sell Apple before or after earnings, please. I mean, those kind of questions are hard to answer, right? I mean, what is your original thesis? What is it? What's the reason behind, buying Apple in the first place? Earnings are very hard to predict, right? Even if we knew what the earnings were going to be like, we can't know what the market's reaction would be. Because even if I tell you, oh, this company is going to beat earnings tomorrow, would you be able to make a guess on how the stock's going to react? We can even do a poll, and I bet it's going to be a pretty good split between people expecting the stock to go higher or lower. So earnings plays tend to be very binary in nature. So that's why it is not always recommended to make a big decision before the earnings. You can always sort of decide once the earnings are out, right? So even with even with trading and investing, it's a lot more reactionary than it is predictive, because we're able to make better decisions once the reports are out, and then the risk reward we can analyze. A lot of the edge doesn't come from predicting before it happens, but a lot of the edge comes in from reacting to what's already happened and trying to analyze if this is an overreaction or an underreaction. That's where the edge is, because if something comes out and the markets are overreacting to it, that's when we need to step in, be like, okay, this is way much of an overreaction, and we need to be buying. And then also, if the markets are not reacting as much, and you'd be like, okay, it's kind of odd, markets are not fully understanding the gravity of the situation, and that's where I want to lighten up on my position, because the risk reward is really not that great. So that's where the edge comes in, not so much about trying to predict what's going to happen, but rather reacting to what's already out there, but whether that's an overreaction or an underreaction. So all right, let me just get to some questions, and we're going to end the live stream a little bit earlier. I'm going to jump into our Discord for some updates and alerts there. But let's take a look at SoFi, AMD, NLR ETF fault. ETF, I would definitely recommend checking out etfdb.com and going over those, because that will give you a full idea, full breakdown of all the ETF holdings and everything. But I can take a quick look at it. AMD here, sitting at an all-time high, pre-market 243. Looks like we're going to open at a new all-time high, starting to break out of this ascending triangle after the inflation print, and support level for AMD is going to be at 239, 240 after the open. So NLR, we're looking at uranium and nuclear ETFs. So holdings is what matters most. If the holdings are strong for this business, for this ETF, looks like 68% is in North America, another 13% is in Asia, 9% in Europe. And since April, this thing is up like 156%. So if you're looking at a uranium and nuclear ETF, you can do research and the holdings. And I'll have to spend more time on this ETF to go over that as well. Let's see. SoFi earnings, safe bet. Look at bank earnings. Look at LC earnings. Yeah, next week we'll find out. SanDisk, is it the same company as I think it is? Is it the one that actually sells like these small chips, like memory chips, like memory sticks? You know, those little micro SD cards and stuff. Is that what SanDisk is? It's a publicly traded company. I had no idea. Year to date, 376%, and yes, it seems to be that company. Founded in February of 2024, IPO'd earlier this year. Wow. 400% gain since IPO. Not quite profitable, but we're looking at over $6-7 billion worth of revenues. Manufacture provision of storage devices and solutions based on NAND flash technology. Wow. Incredible. I'm going to add this to my watch list. next big correction and pullback, we are in. Crazy how much money you can make selling those little microchips. From August 2025, stocks up almost 300%. Incredible. Yeah, I was gonna say, founded in 2024. That's definitely not gonna be true. But that's what TradingView is telling me. Founded on February 5th, 2024, and is headquartered in California, Milpitas. Hopefully, I'm saying that the right way. SSDs booming for Gen AI videos. Yeah. See, these are the kind of ideas. This is what we need to bring to the table as a community, is bring ideas like these. Of course, it's already moved up insane since June, July, August here, 361%. But this is what we put on our watch list, right? How big is the market? How strong is the moat? How much market share does it already have? And what's the future potential? Please have a good balance sheet. Okay, just over $500 million worth of debt. Seems like the company's got plenty of cash, $1.5 billion, and total debt is about $2 billion. Earnings expected to accelerate. That's one of the reasons why. 2026 is more than double in earnings, and then get up to $10, $11.86, $13.54, and revenue not growing at the same pace as earnings, but I'm assuming the margins will get better and better and better. Because right now we're looking at gross margins of 26%. Net margins are negative, but the company will eventually become profitable, and that's where this momentum is coming from. SanDisk re-exited their bankruptcy, hence founded in 2024. Yeah, definitely got to be looking into this stock more. Amazon, very good. I agree. I think Amazon is trading at a pretty lucrative, pretty attractive level here. We were talking about this at 210, 211. So we're seeing a nice little bounce back higher from that price point, and of course getting back up. Resistance is going to stay put at 228 all the way up to 235, 236 for Amazon. So a lot of consolidation sideways in that range for Amazon. So very strong support, triple bottom support there at 210, 211 with a resistance all the way up to 235, 236. All right, everyone. So that's going to be it for today. A little bit of an early live stream. But inflation numbers coming in very strong, right? Better than expected. And so the markets are starting to see that nice momentum, nice little pop here. Pre-market, we'll find out if this momentum continues during market open. But we are up on the week. We are up on the month. And we're so far up on the day. So thank you so much for joining. Link's going to be down below if you're interested in joining our community, of course. 30% annual discount available until the end of this month. And all the individual courses with lifetime access are going to be 50% off. So 200 plus videos, the entire full bundle, 50% off. And of course, the memberships are currently 30% on an annual basis as part of the Halloween sale as well. So link's going to be pinned at the top. Thank you so much. Have a great weekend, everybody. And we'll be back on Monday morning for the live stream. And of course, if you have any questions, just message me on Discord or email me at admin@moneyvest.com, and I'm more than happy to help. Happy investing. I'll see you all